this session. Just to ensure folks who are unable to join us still have access to the same resources, as this will be posted to our YouTube page as well as our website. So good evening and welcome. My name is Nirmala Singh. I'm a founding board member of South Queens Women's March. Thank you all so much for joining our Personal Finance 101 workshop in honor of Financial Literacy Month. I see a lot of familiar faces and names, so welcome back to South Queens Women's March. For folks that are newer to our organization, welcome. So just to give you some context, we were founded a little over 3 years ago at the height of the pandemic to curb gender-based violence. And we've really kind of grown to just become a resource in our community for many different aspects. So, and fun fact, our first workshop in 2020, it was actually a personal finance workshop. So it's really great that this has just become kind of one of our annual workshops and just something that we always look forward to, because we always say economic empowerment is key to achieving true gender equity. And we're so excited to host this workshop for our community members. I also want to thank our member, Nicole Cobham, who's just been instrumental in leading our gender equity work when it comes to anything finance related, and her amazing colleague, Ayoola, who will also be presenting alongside her as well. So thank you all to our participants who have joined today. Feel free to utilize the chat box as we go through the presentation if you have any questions. I know that they both have time at the end as well for Q&A, but if there's anything that comes up or you have any questions, feel free to drop them in the chat box. And I'll now pass it over to our two fabulous speakers.
Thank you, Nirmala. And thank you everyone for joining us today. I'm really excited to talk to you all about Personal Finance 101. So let me get us started and actually pull up our deck here. Okay, let's see. Are we good? Everyone can see? Okay, yeah. Great. Thank you. So today we want to give you all an overview of what financial literacy is, how to manage credit, a little bit about budgeting and some tips for investing. And like Nirmala said, we'll leave some time at the end to answer any questions you may have. So moving to slide 4. So what is financial literacy and why is it important? So essentially, financial literacy is the ability to understand how to, manage your money or have the financial skills. So this is personal financial management, budgeting, investing. But essentially, this is really important to know because it is kind of like the starting and the foundational relationship with you and your money. So this is going to be a continuous learning journey. So you'll always have more things to learn, but it's better to start early because education, especially financial education, will be the key to success, to have success with your money. So as you can see, there is currently gaps within the financial literacy capabilities within America, especially for those of minority or biopic populations. As you can see, we have almost 50% of Americans have trouble keeping up with their monthly expenses. Women tend to have lower levels of financial literacy than men, as well as families of color will, even though making up majority of the population, will still fall behind white families in building wealth. And we actually have in the new census data that was shared that white individuals on average have 18 to 20 times more of their net worth than biopic individuals. So we're hoping that this workshop is kind of the start to having these types of conversations, as well as giving you access to a financial guide that will help empower you to move forward in your journey to financial success. So starting off, we'll go with managing credit, and I'll hand it off to my colleague, Ayoola.
Hi, everyone. My name is Ayoola Ogunwale. I am a financial literacy educator. I've been doing this for the past 3 years. I grew up from Brooklyn, New York, and then made my way to New Jersey. I kind of migrated there and bought a home, which I would talk about later on. And I am currently a senior manager at a consulting firm called Protiviti, which I actually met Nicole. And after that, we hit it off since then. So as you guys know, we are all here today to talk about, finances and managing credit. So on this slide, we are here talking about the 5 C's of credit. And I think it's very important for everybody to know exactly what these 5Ds are, because they impact your credit and how lenders look at you, especially when they're evaluating if they want to give you a loan, rent, eventually decide if they want to rent to you, or even buying a house, right? So the first one is capacity, and that's the debt to income ratio. So what a lot of people don't know is the industry average, right? So the debt to income ratio is actually vital to your portfolio. According to the Consumer Financial Protection Bureau, the debt to income ratio for all debt should be around 36%. So 36% of, so for example, if you have 20K in credit card limit, you should only be spending 36% of that. In easy numbers, right? If you have $10,000, you only should be spending $3,600 of that amount in credit, in debt. This makes you look liable to lenders, and that you're keeping a low debt to income ratio as well. So capital is the amount of an applicant has. So in this case, the example that we're using, that would be $10,000. The more capital you have, the more it is. So throughout this presentation, I will be giving out tips and tricks to kind of help you out through your financial literacy progress. So one thing I typically like to do, which a lot of people don't do, is every year with your financial institution, I will recommend for you to call them and ask for a credit increase. So a lot of people ask, why do I need to call them and ask for a credit increase? Because this credit increase decreased your debt to ratio liability. So from you going to 36%, the next year you can now have, instead of 10K, now you can have 15K. And it will bring your ratio down to 20 or 26 and so forth. So please keep that in mind and write a reminder to yourself to reach out to all your credit lenders to see if they can increase your credit limit. Another thing is collateral. So how much assets you actually have, or that you can back up for the security of the loan. This is huge, especially when you are trying to get a loan or secure a car or so forth. A lot of times this is valuable for institutions in which you have banking with. So institutions that you have bank accounts with, checking account, savings account. One thing that they look at is, hey, they're trying to get a loan from us. Let's see how much you have in our bank, in our accounts. And okay, if you have a lot of money in your account, you are a member we want to lend to, because we know that you could pay us back. Also conditions, the purpose of the loan. I think this is vital because of the current market we're in. A lot of people say we're going towards a recession. Some people might say we are in a recession. And I think it depends on everybody's perspective of it. And I think this is prevalent to the type of interest rate you will have, right? Because right now the interest rate is about 6%, 6.5%. But if you was to get it last year, you could have got interest rate for 2%. And in theory, that would have saved you about 200. No, I'm lying. That could have saved you from 500 to 1,500 in interest that you'll be saving on a monthly payment, depending on how big your loan is. And a character, I think this is huge. This is your credit history. So I have a lot of my colleagues like, oh man, I hate this credit card. I just want to pay off this credit card and cancel it and turn it off. One thing I would recommend for everybody not to do is close your credit history or close a credit card, because it actually impacts you negatively. One thing that credit is like is the history of your credit history. So the longer you have a card, the better it is. One thing that I do that helps me is if it's a card that I really hate or I don't even want to spend it, I chop it up, I throw it in the trash, and I never use it. And I know at the end of the day, yes, it's going to help me in the long run when I eventually want to buy a house, buy a car, but I'm not affected by it. And also I don't get to use the card as well. So that's one avenue I go about it. And you can see in the chart below, we have exactly what's a good debt, a bad debt. Again, a reasonable mortgage, reasonable car loan. Again, this depends on the capacity, which is the debt to income ratio. So keeping that in mind, student loans, business loans is a little bit different because sometimes it doesn't go into your actual credit report, it goes to your business credit report. So please keeping that in mind and so forth. And then bad credit, like we said, once you start going over your debt to income ratio, that could become a factor. So just keeping that in mind. Next slide. So yes, this is exactly what we talk about, managing your credit. So payment history, this is very important. Exactly how much you owe on your loans, on your credit cards, student loans. The payment history determine how likely you're going to pay back a lender. So for example, when you apply for credit, the first thing that they look for is, hey, is this person going to be able to pay us back? So they look at, all right, they look at your previous transactions and your previous loans and say, hey, is this person actually paying us on a monthly basis on time? And I think the on time is very, very key. Some lenders give you flexibility, and some lenders report at the end of the month, at the first of the month. I think it's very important for you to realize. So like, for example, right, I have a mortgage loan, right? And typically when you pay your mortgage or you pay your rent, you're supposed to pay the first of the month. But my lender gives me till the 16th or the 17th to pay. And anything after that, then they got to report it as a late payment. So so it's very important for you to know these things. Ideally, I pay on the first of the month, but when times do come, when I'm not able to pay on the first, I know that I have a little bit of cushion to help me to get to my goal. Also understanding how much you owe, right? So if you took out over 30K in loans, and if you requested a credit card of 30,000 and you are only spending, and you are spending the whole 30,000, that doesn't look good to the lender, again, because we talked about it, the debt to income ratio, that matters, that is key. The length of your credit history, which we also talked about the last slide, making sure you don't get rid of any of your old credit cards, and then new history. So typically when you are shopping around or looking for a new credit card, it's very, very important that especially when you're trying to do a big purchase, it's very, very important that you are not shopping around. Because when you shop around, when somebody checks your credit, it decreases your credit. And too many credit inquiries can make a lender or a mortgage not want to give you or give you that loan. So keep that in mind. One thing I would recommend is, like, for example, if you're shopping for a car, one thing I would recommend is go to an agency that pulls your credit once and shop around at multiple businesses and multiple banks for you. So you only get to pull your account once, but it's being shopped around on multiple banks and you get the best rate possible. And then also type of credit card usage. I think it's very important to know the type of credit use that you have, student loan, car loans, and see how they can benefit you in the long run. Again, who exactly is looking at these credit scores? Again, like we said, the lender, even military, your employers, banks when you're trying to get loans, rental agencies, if you're trying to get a property, they want to see how liable you are if you're paying on time on a monthly basis. And also utility companies, right? They want to see if you're able to pay them on time. And a lot of people be surprised. This is also a life hack, right? I try to put life hack and like tips for some people out there. If you're currently paying a utility, you can actually sign up for Experian.com, and you can attach, and this is a free software. Sign up for Experian.com. they can go into you can connect your bank account, and they will see if any utility bill is being paid. And that utility bill, since it's being paid on a monthly basis, can now connect to your bank account, and now is increasing your credit score. So basically all the bills you will pay, and sometimes it could include phone bill, light bill, gas bill, so forth, whatever it is. If you could connect it, it will utilize it, and you're paying on a monthly basis, and it will increase your light bill. So that's another tip for you guys just to keep in mind. Next slide. All right, so tips, right? Make sure, especially when you get in credit, make sure you know the terms and conditions. Make sure you know the APR. Make sure you know your interest rate. Those are two different things. I recommend for you to do research to understand exactly what those are. Beware of store credit cards. Just because you want an outfit or you want the best credit cards are typically not the stores. I think the best credit cards is ones that benefit you in the long run. I think everybody needs to figure out, because most stores try to pressure you at literally at the checkout and be like, hey, you should sign up for our card to get a discount here. But typically that's not the best choice, best decision right there. I think when it comes to credit, which can affect you in the long run, I think it's very important to take your time and be selective about where you shop at and the stores you get. Avoiding having too much credit cards, like we said, too much credit, too much loans on debt to ratio can cause bad arm. Be aware of minimum monthly payment traps. So a lot of companies would say, hey, you could pay the minimum, but what happens is that interest piles up and piles up and piles up over time. Home equity line of credit, which we'll talk about, is mostly about when you have a property and you have less than 80% of value on that property, and you can take out some equity from that property and use it for investment. You can use it for fixing up your home, and you can use it for other things. And I don't want to reach much on, but these are just below are some strategies to have some positive credit, avoiding bankruptcy, not having a criminal record, and so forth. Removing errors from your credit report. We can also help you with that, which we'll tell you later on during this presentation how you can do that, how you could go about it. We had a question here about what's a good APR. I think that depends on the lender that you currently or where you're shopping at. Right now, the industry average interest rate is about 6% right now. So APR will be close to 5.5 or a percent higher. So right now I would say 6.5 to 7. But again, if it was a year ago, I would definitely say 3 to 4% max. So it depends. It definitely depends on the industry that we're in. I mean, on the era that we're in and how the market is and the environment. Next slide. Okay, so this next slide I think is very, very important. And I would just ask everybody to take a screenshot. So typically what I like to do in my presentations is I like to do live demonstrations. So through this site, I don't know if you could click on it for them or go on it. So through this site, you actually can request your credit report for all 3 agencies. So a lot of people don't know, okay, what are 3 agencies? 3 agencies are Equifax, Experian, and TransUnion. And depending which bank you bank with, they're gonna pull from one of these sites. So it's not typically both, it's typically one. They partner with one, and that one agency will tell them, okay, this is your credit score, and this is everything on it. By law, you are required to have your free credit report per year from all 3 agencies. Through this site, you can pull these reports, know exactly what's on it. Like when I pulled my report, I realized they had like 5 different variations of my name, wrong addresses, wrong details. And what I did is that I wrote them a letter to remove those inaccuracies from my account and from my credit report. And even loans that have been paid off and they said it's still active, or loans that was on my loan or on my credit by accident, I think this is huge because a lot of people don't know what's on the credit report. And I think it's important for you to get this free tool. And if you on a yearly basis and get it from all three places and review them. Again, physical copies I think is more beneficial than the digital copies. The physical copies has more details. And if you used up this and you wanted to check, let's say you use this and then you fixed up your credit and you kind of wanted to know, you can use a crediting monitoring service and it could send you a report of all your three services, all your three credit reports, so you make sure you're on track. So I would recommend everybody take a screenshot of this and just to utilize this site and just to check a credit report in the near future. And we could go on to the next slide, which is budgeting. All right.
Thank you, thank you. So next we're going to cover budgeting. So what is budgeting and why is it important as well? So essentially it's going to be a spending plan to kind of see all of your income and expenses over a period of time. But really to start starting to create a budget, you need to understand how you're spending your money in the first place. So I always recommend, whether you want to do like a month or 3 months out, take a really good assessment of your income that you're taking in, where you're spending money, whether it's rent, utilities, grocery shopping, miscellaneous expenses. Get a good image of your current state of all of your expenses. And then that is where you can start to build a plan as to like where you want to be, right? So essentially a budget can help you, one, with putting aside money if you have saving goals, whether it's long-term or short-term, preparing for any regular expenses as well as unexpected expenses. And we'll later talk about, that emergency fund that I think that everyone should have, as well as understanding how to control your expenses and how you're spending your money, as well as reducing any stress, as well as one of my favorites is an excuse to stop spending money and any excessive money. So really take into consideration, how are you spending your income on what things that you could cut out, because that will really set you up for success to make sure you have the money for a rainy day fund, any investments that you need that you want to, participate in. So the budget will be the foundation for you to get started on that. So I will hand it off to Ayoola to give a little more debrief on like how are you going to be able to start to build out your budget with your income.
Yeah. And I think the most important thing for individuals, especially me when I was younger, and even when I was older, when I was younger, one of my mentors told me I did not have a budget. My parents didn't have a budget. There was no need for me to have a budget. I didn't think about it. But my mentor, and I was on a life to work. I was on a path to work for corporate America and have, potentially a lot of money, and increase my income. And he basically said, if you don't know, I'm trying to find it. If you don't know where you're going, then you can follow any path. So basically, when you have a budget, which is very, very important, you get to set goals for yourself on how much you're trying to save. And then this is the other part that he also mentioned. He said, if you don't have a budget and then you start making a lot of money, what's going to happen is when you do start to budget, you're not going to be the best financial person as you can be for you and your future family. So it's better for you to start. The earlier you start, the better it is for you and your future family and your future kids, which we'll talk on about investing and retirement and so forth. And it's the same thing with budgeting, right? Because what you don't want to do is pick up bad habits because now you're making more money. You work your butt off to get a new job, you don't have a budget, and then you increase your spending limit. And now you put yourself in debt. And then now you're trying to combat and then create a budget for the bad habits and the bad spending that you're making. So it's better to create a budget from the beginning, and then eventually, as you make more income, allocate the percentage and so forth. So here we have the 6 steps to analyzing a budget, which is assess your personal finances. So this is another thing that we do for my company. So Another thing that we do is we do payment analysis. So for example, if you own 5, 6, 10 credit cards and you own a lot of debt, what we do is that we analyze all your finances for you. We go through an hour session with you and we understand every little thing from like Netflix to like popcorn to like whatever it is, candy, eating out. We allocate everything, get everything a budget. And then we see how much you're spending on a monthly budget, on a monthly basis. And then we also see how much you're making. And we create a plan for you to actually decrease your debt. And we create a payment plan. We create 2, 3 different variations for you. And we tell you how long it would take for you to pay it off, you know, for you to see it visually, because that's one thing some people are not able to see, right? How long would it take for me to pay off this loan? And we actually do that to help and cater to our clients. So if you're able to set the goals, set your goals, analyze your personal situation, I think it's very crucial for everybody to set financial goals, which is probably like, hey, I want a high paying job in the next year or 2. I feel like that is vital. Even as simple as, hey, I want to get a promotion this year, or I want to make $2 more in the next couple months on my hourly wages and so forth. Create a fixed budget and stick to it. So typically what I do is that I have a budget for going out. I have a budget for vacation. I have a budget for emergencies and so forth. Yeah, emergency fund, as you can see in the right-hand side, it's very, very key, because as you guys know, we are humans and the unexpected happens at any time. Randomly, a friend can hit you up, hey, I want to go on a trip. It would be vital for you to have a vacation budget. An emergency can happen in which, you know, God forbid, something happened to a family member, a loved one, and then you have to travel overseas, or you have to travel to another state to go meet the family and console them. So having this emergency fund can help you in certain situations, and I feel like that's ideal. With your money, with your current spending, you can monitor your spending on a monthly basis. Another thing that I do, which is very ideal, is if you have an employer, which and the employer lets you set a percentage to where your money go to, I would set a percentage of a certain amount I want. So I would put 10% to a certain bank account and say, okay, I only want this. This will be the money I'm saving. I want 50% of my monthly or my biweekly earnings or my weekly earnings to be set to another bank account in which I pay my bills, and so forth and so forth. So in the other part is that you don't have to do this at the end of the month and separate your account and say, okay, I'm going to save $500 this month. I'm going to save $200 this month. It's automatic. So when you get paid, you know for a fact, you don't even have to think about it. You don't even have to worry about it. The 10% is being saved on a monthly basis, and by that you just accumulate, and you don't even have to think about it. And these are tips and tricks that most millionaires and other successful people use to eventually save and be in a financial position. And then I would say on a bi-yearly basis, review your financial progress. Make sure you're reaching your budget goals. Because one thing I've seen from my clients is like, yes, they have these budgets, and then they take money from their savings and to help them for trips, to help them to go out with a night out with the girls and so forth. And then you revisiting that and seeing that you're not meeting your yearly goals can help you stay on track and actually meet them. We could go on to the next slide. All right, so a budget is very, very important, right? Think about your goals and your dreams and think about, okay, if I really want to buy a home, how much do I need to save, right? How much do a home cost, right? Do I want to do FHA? Do I want to do conventional? I want to eventually get my own apartment. I want to leave when my parents I want to eventually get my apartment. I want to raise my credit score. Determine your wants and your needs, which is key. I think one thing that I struggle with is because my friends have it, I need to have it. Because society have it, I need to have it. I want to look good. I want to have the most popular things. I want to look good. I want to get compliments on the stuff I'm wearing. Like, I don't want to look cheap, but at the end of the day, what matters is the end goal, right? And where you're at. And most millionaires, a lot of people won't believe it, most millionaires do not trust fancy. They wear the most basic things and save their money because they have nothing to prove to anybody. Evaluate your expenses and your budget on a weekly, monthly, or yearly basis. Make adjustments where necessary and stay informed with your options. You can reduce your costs by your budget costs. Coupons is huge, right? A lot of people don't use coupons. I know I used to come at my mom about it. I used to be like, Mom, I ain't using no coupons. I have to cut them out and take my time and read them, and all that stuff. But it really does save you money in the long run, and especially over a month or a year span. Buying items on sale and buying items in bulk is really ideal. And also have a freaking shopper card. You get a lot of rewards and a lot of savings on there. So just keeping that in mind. Next slide. So this is a budgeting model that we've created. We've had a lot of feedback from our clients, but I would say these two are the top two that we think is beneficial for a lot of people that's new to saving or want to save. So for example, if you are a person that have a lot of living expenses high, you have the 60-20-15-5 model, and you can customize this to your ability. So I would recommend everybody take a screenshot. So like, for example, if your rent is a little bit higher because you live in New York, which it typically is, and you have needs, you got wants, you have to upkeep yourself on a monthly basis, let's say that's 60%, and then you put in 20% away for saving, Roth IRA, retirement, or kids, because you might have expenses for kids on a monthly basis. And you might have 15, which is for business. It also could be for kids. It could be for the credit card bill. Again, these are the numbers. And what I would recommend for everybody is to budget them to what fits your needs, right? So for me, for example, when I started my job, I had 60%. I was investing 20. The 15 was actually not business as kids. It was actually going to my credit cards and my bills. And then the 5% I was saving. But the process is to get in the process of saving. A lot of people would say 5% is not that much. But over time, it adds up. And then what you want is that you want to get in a mindset of saving. That is the thing. You want to get into the mindset of saving your money and don't even having to think about it, because we talked about a way you can automate the process, right, through your employer and put that percentage, and then boom, just go, and that money goes in a separate account, which you don't even have to see or touch. And one thing I do, which makes it harder for me, I get a digital bank. I even make it harder. I get a digital bank. So for me to even get the money out of my digital bank, I gotta transfer it. It takes 3 business days to then transfer it to Bank of America, because a digital bank don't have a physical store. So I can't just take it out of the ATM. So now I got to transfer it right to my Bank of America or Chase, and then take the money out. And that helps me, I'm like, okay, I really need this money right now. Okay, I can't get it because it's going to take 3 business days to get that, right? And so forth. So that's another thing that I do for myself. And then the other one here is if 60% living expenses, again, it could be 70, and then you can use, again, it could be 50, and then it could be 40, could be your investments, it could be your credit cards, and then you could save more. You can save 10 for your emergencies, or you could save 10 for vacations and so forth. So what I would say is it's ideal. I know I have different examples here, but it's very ideal for individuals to use these numbers and set it based on their lifestyle and then based on their needs. Next slide.
Okay, and next we're going to be discussing investing. So what is the purpose of investing? And it's similar to like with budgeting, it's having a goal in mind. So essentially, this is going to be able to put your money to work, whether you are trying to achieve any long-term goals as well as any short-term goals. And that's why it's really important to really understand what you're trying to do with your money. So, the biggest two drivers we have is retirement, essentially. It's always better to start as early as possible, time value of money here. And that's something we really want to emphasize. There's various ways to diversify your portfolio and how, making your money essentially work for you for the goals that you have. And then as well as we have short-term goals. So this is what a little bit what Ayoola mentioned. If, you have this vacation you really want to take, or that you have to, do something for your family in months' time where you are now saying, okay, you made the budget, right? And I need to invest and just make this, if you have $1,000, you're going to put into a short-term investment because you need, 2,000, in another 3 months. It's just being really intentional about what you are investing for and kind of learning and educating yourself on the different products that you can utilize to make your money grow. So I will pass it off to Ayoola to give a little more, context on why it's important to start early with investing.
So this illustration gives a great example on why you should start earlier than later. So in the first example, we have a 401k of a person being 25 of age. Their current salary is 50,000, and currently they have 30K in their 401k balance. They contribute 10% of their salary to the 401k, which on a yearly basis, which is about 5K per year, and then the employee match 50% of 3%. So it's a little bit confusing. So the employee match limit is 3% of what your salary is. So for them, they'll probably be close to $600 or so, and they match 5% of that 3%. So 50% of that 3%, excuse me. So I think when you add that together and you see what the total cost can be over the retirement age, or let's just say you retire at 65, and you can see on the right-hand side, the balance will be $1 million, 1.6 million, versus you starting at 40, right, with the same amount, with the same annual salary, with all the numbers being the same, you're making 1/3 of that, which is 562. So this is the power of compound interest. As some of you guys know, is very, very important to start early because it's vital. So your money accumulates and just doubles and doubles each year, and eventually grows into something big. So you waiting that 15 years can cost you over $1 million in savings. As mentioned, 401k is one of the resources that's provided by your employer. I believe everybody should utilize it to the best of their abilities and put some amount in there. There's other investments like Roth IRA and so forth. So 401k, the benefit is it's before taxes. So and Roth IRA is after taxes. So basically what that means is the more you make, the more you get taxed, right? So if you put $5,000 into 401k, your yearly salary is technically 45K. So if we're using this example, you're getting paid 50K and you put 5,000 into 401k. If the tax bracket, if the tax is different from 45 to 50, you could get taxed less and you could save money and so forth. And the same thing with your health insurance and so forth. And so it could save you money in the long run. A lot of people are not a big fan of Roth IRA. Roth IRA is the opposite. So it's basically after you get your paycheck and after all the taxes are taken out, you then put money into an investment investment portal and or instrument or investment tool. Now, a lot of people don't like that because, again, you have to take money out of your bank account and then put money there. I would recommend everybody to do their own due diligence and see what exactly works for them. I know some people prefer Roth. I know some people prefer a 401k. The difference is 401k, once you take it out when you're 65 years old, you get taxed. Roth IRA, because you already paid the tax on the money, right? And you pay the tax on the money, and after you get the money, you put the money into an investment tool. When you take it out, you do not get taxed on that money. And you're getting all the interest made on that money as well. So I would recommend for everybody to do their research and actually understand the difference. And if your employers have these two, definitely invest in them. Next slide. So tips, right? Know why you're investing. Again, we all want to invest because nobody wants to work forever. We all eventually want to retire and live our dream, travel the world or relax or live in somewhere in a country by a beach somewhere. Never invest in something you don't truly understand, right? Do your research, do your due diligence. And remove emotions from investing. I've seen that many, many times with individuals with investments. And don't be in a rush to make an investment. Start early, buy and hold. So the more assets you have, the more value you have to lenders, people around you, and the more, and that adds to your value. So when people say, hey, how much you're worth, you can add that asset to your worth, including your salary, which makes you valuable and increase your self-worth, which is really huge. And I would say diversify. So there's multiple things you can invest on. You can invest 401k, you could do Roth, you can invest in stocks, you can invest in NFTs now, you can invest in Bitcoin. There's so many ways into it, but I highly recommend, before getting into all of these, of course, do your due diligence, talk to somebody, read a book, understand the differences, understand the risk before putting all your money in these different areas. One thing I do wanted to share with you guys, next slide, yep, next slide. So one thing I do want to share with you guys, if you guys could take a screenshot of this, I wanted to run through a demonstration, which is a lot of people, one thing we get, and you could go on the site, Nicole. So one thing, that first site. So one thing, this is a live example. So one thing we get a lot from our clients is like, man, I don't know what to invest in, right? What should I invest in? What stocks are good? And we ask people, hey, invest in something you know, something you have. Like, I know a lot of people have Apple phones, invest in Apple. And then a lot of people tell us, man, we don't have the money for it. You know, Apple stock is like $200, $300 for one stock. I don't have the money for it. There are tools out there, including Cash App, that let you purchase partial amounts of a stock. And a lot of people don't know this. So instead of if you don't have the whole money in it, whole money of what the stock is worth, but you still want to invest partial, you can do it. It's a flexibility. It's something it started about a year or 2 years ago, and I think it's very ideal, and then get people, and then getting more and more people into investing. So this first site, which Nicole, can you pull it up? If
Yep.
you can.
Can you see it?
No, we see the slide.
No.
So,
Let me try to share again. Hold on.
okay. So this first site, which I recommend you guys take a screenshot. So this first site actually is Congress and politicians. So by law, through the regulations, politicians in Congress are required to be transparent and be forthcoming with their investments. So with the stocks that they're currently investing in, right? And so you can see that, right? Recent trades by the U.S. Congress, and you can go through and you see it has the politicians' names. And you can go down and you can see, oh man, they purchased this yesterday. They purchased this today. And you can see purchase Apple for 15,000, almost 15 to 50K. And what you can do is, hey, if I don't know what the top stocks are, majority of the time, these Congress individuals have what would I say? They will have brokers or individuals working for them and giving them advice on what to purchase. And this information is free for you. So in a sense, you can utilize all of this to understand what stock they're using, what stock they're buying. Do your own research, which I always recommend. Do your own research, but you can leverage this to help you out with certain stocks, right? Because, for example, you try to understand, why is a politician putting 50K to 100K in the ABT stock, right? And they're probably getting advice from financial advisors. So you can utilize this information to your advantage. I've utilized this information. It's helped me a lot. And I've grown over, I would say, over 100K on my portfolio just by doing this. And I don't need to hire a financial advisor, right? So, and then we could go back to the presentation. One thing I would use, if you could click on the next slide, on the next link, is MarketWatch. And basically, doing your due diligence is very, very important. So going on MarketWatch and clicking on these. So for example, can you search Apple for a second? AAPL. And this, you see, is right there, right? Apple costs $166, right? So one thing I typically do is that I go to financials, which is there at the bottom. And I try to understand, okay, how much are they making, right? And the key number you want to look at is, can you go down for me? There we go. Net income, right?
Yeah. Mm-hmm.
Yeah, that's what you want to see. The net income. Gotcha. The net income over time and within the past couple of years. And you can see they've grown in the past 4, 5, 6 years. So this will be a valid company to invest in. I will invest in them because you've seen growth every year, which will eventually increase your money in the long run. And then you also have the percentage below. Due to time, I am going to go on to the next slide, but if you guys have any questions about this, we could definitely talk.
1 second.
All right. And the last piece here is, hey, if you're interested in buying a home, this is one thing that I talked to Nicole about, and I think it's very special to me. I'm also a real estate investor. If you're interested in buying a home, NACA is a program that offers a no down payment, no closing costs, in-house realtors. And a lot of people think it's unreal, and they do it for minorities. And all you need is 5 to 10K to close. The mortgage must be 30% of your monthly income. So basically you would divide what your salary is per year, divide it by 12 and times it by 30. That's the amount of mortgage you could possibly afford. And they help you go through all the processes to qualify and own a home. And I think it's a great program. You can email me more about it. And I think it's very beneficial because a lot of minorities don't know about these programs, and it is very useful. As of right now, I will leave it for questions that individuals might have. Thank you guys for having me. And I'll open the floor for questions.
Yeah, if anyone has any questions, feel free to whether unmute yourself or utilize the chat. We'll be happy to answer.
I guess in the meantime, I can continue to talk about NACA. So, a lot of people don't a lot of people never heard of NACA, but they've been doing this for over 20, 30 years, helping minorities and the non-minorities to own homes. The only requirement is that you don't own a home, and that you are within the median average, the median salary average in your county. So basically, you could go on their website and you could type in what your county is, what the median salary is. As long as you're under that, they are going to be willing to support you and help you find a home. One thing that they do want to see is consistency, that you're paying rent. If you're currently with family, they ask and they will want to see that you're saving for at least a year, that you're saving at least $500 a year. So again, this is what I'm saying, budgeting, knowing that you're able to save that money for the future. And then from there, you're good. We have a question here, like, what is a good credit score? So I think that it varies. The highest one you could get is around 800, but I think a good credit score is around 650 and up. Again, it depends on what you're trying to do with it, especially when you're trying to buy a home. The higher your credit score, the better it is. So the lower your credit score, the higher your interest rate, and a lot of people don't know that. Same thing for car purchases as well. So it's very, very important to make sure that your credit is good and good standings, up to date, and I really do think those two are amazing. So making sure you understand what your credit is, and also making sure that you are checking what is on your credit report, because it could be stuff you don't even know. Like, I know we had a client who used the link that was provided, and he didn't know that somebody was using his social security number and buying stuff off his credit. So it's very important to check your credit score on a yearly basis to know exactly what's going on. All right. That seems like there's no questions. A lot of people here are shy. But yes, if you guys do have any questions, I'm going to put my email in the chat. If you guys have any questions, want any advice, budgeting, financing, analysis on your loans, and you want us to help create a plan for you to kind of pay off the debt that you have, we'll do that as well. Just reach out to us and we'll be more than willing to help. We appreciate you guys for having us. Thank you so much for having me here. We really appreciate it. This is the second time we've been invited back, and we love working with you guys. And so thank you for having us. Appreciate it.
Yes, thank you so much. I really appreciate it. And thank you as well, Nirmal and Aminta, for having us and hosting our annual personal finance course. So thank you everyone for joining, and feel free to reach out to Ayo as well as myself if you have any questions. But yeah, I can hand it back to Nirmal if you want to wrap up.
Great. Yeah, thank you so much, Nicole and Ayo, for taking time out of your busy schedules to share such important resources with our community and with all of us. We appreciate it so much, and for even extending your email for folks to follow up if they have additional questions. To all of our participants, thank you all so much for joining us tonight. The recording will be up on our YouTube page as well as our website, and keep an eye out for all of our upcoming workshops on our social media. But thank you all so much, and I hope you all have a great night.
Bye.